Good afternoon, ladies and gentlemen. Today, we are going to delve into the fascinating world of technical analysis and explore the groundbreaking work of one of its most influential figures, George Lindsay. Over the next few slides, we will take a closer look at who George Lindsay was, what technical analysis entails, the trading systems he developed, and the key lessons we can learn from his approach. So sit back, relax, and get ready to embark on an exciting journey through the world of trading. George Lindsay was an American stock market analyst who made significant contributions to the field of technical analysis. He was born in 1900 and began his career as a bond trader in the 1920s. However, it was his work in technical analysis that would make him famous. Lindsay's most notable contribution to the field was the development of the Lindsay Timing Model, which is still widely used by traders today. He also wrote several books on technical analysis, including The Essentials of Successful Trading and Technical Analysis, the basis for investment decisions. Lindsay's work has been praised by many experts in the field, and he is considered one of the most influential technical analysts of the 20th century. Technical analysis is a method of evaluating securities by analyzing statistics generated by market activity, such as past prices and volume. It is used to identify patterns and trends that may indicate future price movements, allowing traders to make informed decisions about buying and selling stocks. Technical analysis is important because it provides traders with valuable insights into market behavior and helps them make more informed decisions. By understanding how market trends and patterns develop, traders can anticipate future price movements and adjust their strategies accordingly. This can lead to better returns on investment and more successful trading outcomes. One of George Lindsay's key trading systems was the three peaks and a domed house pattern. This pattern is used to predict market trends and consists of three peaks, with the middle peak being the highest, followed by a domed house shape. The pattern is completed when the price falls below the base of the domed house. Another system developed by Lindsay is the timing model, which uses a combination of technical indicators to determine the best time to enter or exit a trade. This model takes into account various factors such as market volatility and trend strength to provide accurate signals. One of the most important lessons we can learn from George Lindsay is the value of patience and discipline in trading. Lindsay believed that successful trading requires a long-term approach, and that it's important to avoid making impulsive decisions based on short-term market fluctuations. By staying focused on the big picture and maintaining a disciplined trading strategy, traders can increase their chances of success in the markets. Another key lesson we can learn from Lindsay is the importance of risk management. Lindsay was a firm believer in the idea that traders should always have a plan for managing risk, and that they should never risk more than they can afford to lose. By implementing sound risk management practices, traders can protect their capital and avoid catastrophic losses that can derail their trading careers. In conclusion, George Lindsay's contributions to the field of technical analysis cannot be overstated. His innovative trading systems and insightful approach to market analysis have stood the test of time and continue to influence traders today. By studying his methods and applying his principles, we can learn valuable lessons about patience, discipline, and risk management that can help us become more successful traders. So let us take inspiration from George Lindsay's legacy and strive to achieve our own trading goals with confidence and enthusiasm. Thanks for watching. Like and subscribe, and we will catch you on the next one.